Hey traders, Raghee here, and we're going to talk about today how bond yields could be a bigger factor going into the end of this month and the end of this quarter than maybe some traders at this moment will realize, and how it could be a little, well, very much a little treacherous for certain types of stocks. We'll talk about that also in this video. So we're starting off with a look at the ZN 10-year T-note futures. The downtrend here means the yields are higher. So a downtrend in the underlying futures contract, whether it be the ZN or the ZB, 10 or 30-year futures, that indicates higher yields. Let me show you what the yields look like. If you want to track the yield itself and not the underlying futures contract, you can go to the TNX. This is the Chicago, the CBOE, 10-year Treasury note yields. You can see the actual yield here along the right side. And one of the things that you'll realize is, well, this has been going higher for some time. This is not a new trend, but when it comes to yields, trends will actually get more attention as they're crossing certain levels, 1.4, 1.5, 1.6, 1.7. As we're crossing certain levels, you'll see the reaction in certain kinds of stocks. Well, let's take note of a few particular, well, some key dates. The 25th of February, so let's jot that one down. The 25th of February. Let's also look at when we crossed the 1.5 level. That was, well, we could use the 25th of February because that crossed 1.5. How about 1.6? That would be the 8th of March. And then how about 1.7? We actually gapped through that on the 18th of March. All right, so let's go back and let's look at a couple names. I'm going to actually show you energies right now. Now, some of you might have seen the way crude oil sold off into the close. That might have just as much to do with a certain unwind in copper and crude and a little bit of an unwind of the reflation trade. I don't believe those trends are broken. In fact, the way that we position mostly in those names are via the old stocks, which are actually holding up a little bit better. But let's take a look at those aforementioned dates. The 25th of February, which is right here, down day. Now remember, that's when we crossed up through certain thresholds. That's the 1.5 on the 10-year. All right, how about the 18th? Let's move over to the 18th. Right there, more weakness. In fact, a nice acceleration down, right? Which was that crossing up through 1.6, and then finally, that was 3.18. That's crossing through 1.7, and then 3.8, which is right there. That's pretty much at the top of this XLE ETF. Now, why am I looking at XLE? XLE, apart from specific dividend ETFs, which I'll show you as well in a moment, XLE and energy stocks tend to have a pretty healthy dividend. So if you're talking about an ETF of energy stocks and a number of energy stocks that have high dividends, as we're crossing through certain thresholds on that TNX, you'll see in which XLE responded. Now, what if we look at another popular dividend? Vanguard Total Stock Market ETF is a popular one, but let's take a look at the iShare. This is the EFV, and this is the MSCI iShare, high dividend name, trades about 3.5 to 4 million shares per day. So reasonably influential volume. Let's go back to those same dates. All right, so we'll go back to 225, big down day. All right, and follow through the next session. 3.8. Kind of a squat body day, all right? Not that dissimilar to what we saw in XLE. And let's go to 3.18 right here. That was actually the top for EFV. Now, not that EFV has not been able to march higher, but when we see those certain thresholds break, we can see there's a reaction in these names. Okay, and what kind of names are these? Some of these are not, and this one's a little tricky. This is a foreign large cap equity, but I don't care if it's foreign, if it's domestic. We can take a look at the Vanguard name and do the same thing. fund managers are having to make a choice as to whether or not they're going to stay in some of these names or whether they're going to reposition into bonds. And you can see the same thing here in the Vanguard total stock market. You'll be able to see the same thing in the Schwab dividend. Same dates, same reaction. And why do I bring this up? Because if we're going to see perhaps some bond buying intensify into the end of the month, into the quarter, we could see more weakness in the markets. Now, you might say, well, what does this have to do with futures trading? Well, remember, as this is happening, we're seeing the crude oil market get hit pretty hard. So we're seeing a pretty healthy unwind in the reflation trade at the moment. Copper's holding its own a little bit better, okay? But that trend in crude and oil stocks and that trend in copper and Freeport-McMoRan right now might be under pressure as we go into this rebalancing at the end of the month. So we might shorten our time frames and focus perhaps a little bit more on things like XLF, perhaps regional banks, perhaps, or outperformers, and think about some of the sectors within the broader averages that we can play right now, or even individual stocks that are relative outperformers, or try to get as uncorrelated as possible to not only the reflation trade, but also the broader averages. Or we can look at things like XLC, which are still holding their own quite well. IYT, which for those of you that are fans of Dow theory and even the Dow futures, this is oftentimes a precursor to movement in the Dow. And the XLI, these are actually two ways to keep an eye on the Dow and their relative outperformers to the YM. In the premium video, we're going to dive into how the Dow, crude oil, energies, and the transports and the industrials can lead us to certain names. And again, I'm probably going to be sticking with the Dow as far as a relative outperformer in this market. I do not believe that the NASDAQ has crossed through levels that signify a breakout. There's way too much bearishness. We've stalled out at the V-score mean. We have still a negative MACD, and this is still a choppy market. So let's exercise a lot of caution. What I wanted to do in this video is show you why and how to measure that exercise of caution that I'm going to be keenly aware of as we go into the end of the month. All right, I hope this helps you, stock and futures traders alike. I'll see you in the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me